Now, online discount broking platform FYERS has seen its revenues nearly double from 108 crores in the last financial year to more than 200 crores so far in FY24. The company recently hit a user base of 500,000 and aims to onboard 1 million users come FY25. It says it is adding nearly 15 to 20,000 customers each month and will attempt to keep its profitability at a 20-25% margin level. Joining me now to talk about these growth numbers and the outlook for the company is its co-founder and CEO, Tejas Khoday. Tejas, welcome to Startup Street and thank you for your time here on CNBC TV18. Let me start by asking you a broader question because, how do you grow revenues for discount brokers which charge a flat fee to customers? That's been a challenge for the industry year after year. Inflation notwithstanding, these rates haven't really moved much. What's your, how are you able to grow your top line in this environment? What are you able to do differently?
Hi, thanks first for having me here on your show. And that's a very relevant question that you started off with. How does one scale revenues in an environment where there's a rising inflation and a never-ending price competition? Well, the way to do it is to grow in terms of the number of customers and more importantly, in terms of the active trading customers. And that's what we've been solely focused on. But from a larger industry perspective, that seems to be a problem right now because the 20 rupee pricing model that was that has been pretty much the market standard for about a decade now hasn't moved up at all, and it's putting a lot of pressure on the brokers' bottom lines.
Well, that indeed is, and we'll come back to it in just a bit. But, your own revenue numbers from 108 crore in FY22 to 200 crore plus now, give us a sense of whether this growth rate will sustain given what we were just talking about, the rates not improving, and where you see revenues by the end of the year, this 80% growth that you're targeting for the top line, will it also translate into a significant bump up in the profits?
I think it will. We've always run business in an organic way. So one of the reasons why we grew 100% is because we are very focused. We are the type of company that prefers to go a mile deep and an inch wide rather than a mile wide and an inch deep. And to us, that makes all the difference because we know exactly who our target audiences are, which is the active retail traders, the semi-professional and professional traders in India. And so we've been able to add value to them. And since we are not really the largest broker in the country, there's a lot of headroom for growth. And that's precisely how we've been able to achieve it. And I think we can continue to do that in FY24 as well.
Well, that leads me to the next question. You're not one of the top 5 brokers. In fact, between the likes of Zerodha, Grow Up Stocks, etc., the top 5 have cornered nearly 60% of the active NSE clients. You are a relatively later entrant in the industry. And, what are you doing now to gain market share? You're saying you'll double your active customers in the next year or so.
Yeah, that's actually a slower growth compared to the growth that we've experienced in the past 3 to 5 years. So doubling our user base is not surprising for us because we've been growing at like a 4x pace year-on-year since inception. So doubling our user base is actually a moderate expectation for a company of our size. And so the way to do it is essentially keep doing what we are doing, which is to cater to traders, build awesome products for them, etc. Yeah.
But Tejas, what would that mean in terms of your market share? Do you think you'll break into the top 5, top 10 even with 1 million users? And I also wanted to understand if all of this growth that you're talking about is going to come organically.
Well, it is. So far, all the growth that we have experienced has come organically, and it will continue to come organically. Now, in terms of the market share question, we are, since we are not in the top 5, which is maybe in the next 1 year, we aim to be in the top 10. The market share question is slightly dicey to answer. We don't look at it like that. We're the kind of startup that focuses on survival rather than to be number 1. So we are not in any hurry to grow. And so that's how we look at it. So we'll be happy to be at maybe a single-digit market share within the next 2 years. By that, I mean maybe 5%, 5 to 7% market share in the next 24, 30 months. If we're able to achieve that, I'll be really happy.
Well, that's a fresh perspective, Tejas. Survival over high growth. But, in the next year or so, when you're talking about breaking into the top 5, you also want to introduce margin trading for funds for traders, start your PMS vertical, maybe AIFs as well. Tell us what timelines you're looking at and, what are your plans on those fronts?
So the kind of business that we are in, there is a need to diversify because of all the crazy regulations that are being introduced, all being done in the interest of the retail investors, of course, but it somehow impacts the top line and the potential for growth to some extent. We plan to start PMS hopefully early next year, and followed by that, maybe we will also explore AIFs. We've also undertaken MTF as the top priority, and by the end of the year, we should be live with our own margin trading facility, which basically enables traders to trade with a certain amount of leverage in the equity markets, not futures and options, but in the cash/equity markets. Yeah, so these are our latest initiatives.
Well, Tejas, we've run out of time, so we'll have to leave it there. But thanks very much for sharing your thoughts, and we hope to speak with you again soon.
Thank you for having me. All the best.